and they can't service the debt, meaning they're not collecting enough income to be able to pay off their debt, pay for rate caps and all the other expenses, insurance costs, everything that's going up. And so they just have a lot more expenses than income. And so the asset may be doing well and high occupancy and great tenants, but is the finances are distressed, and so can go out and they can either do a capital call, with their common equity stakeholders, or they can borrow. And basically, when you borrow, you're putting that second, because they still have that senior debt, you're putting that second loan right behind that senior debt, and kind of pushes down all the other common equity stakeholders in the capital stack. So you or we can be a part of that preferred equity, where we come in as kind of that. I mean, I say quote unquote rescue capital, so as opposed to them having to do a capital call.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level, and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest is returning guest Terra Padgett, real estate investor, insurance broker, collegiate basketball Hall of Famer, founder of the PowerPool Fund Investing Club out of Houston, Texas. Terra, welcome to the show.
Welcome. Thank you, Dylan. Good to talk with you again.
It's great to have you on here. Since we last spoke, and we were talking before hopping on here, real estate is an interesting space to be a part of, because it's just as much about the deals that you don't take as it is the deals that you do take. And so I know when we're talking about commercial real estate, or small multifamily even, evaluating deals is a full-time job in many ways. How has you been approaching, looking at deals? Are you communicating with wholesalers? Are you going out and putting in offers on deals? Are people coming to you and saying, hey, is this something you would like to take a look at, or is it across the board?
Yeah, it's a little bit of everything. So, once I get on either an investor list or, a general partners list, they'll, start sending their different deals and whatnot. And it really just depends on kind of what we're looking for at the time. So a lot, I'd say in the first year of the club, it was a lot of equity, maybe new development deals that maybe were not cash flowing out the gate. And then we started to shift our focus to some more cash flowing deals. So maybe some real estate funds and things like that. And then this year, a lot has been on the debt side. We've looked at a number of opportunities on the debt side. And so, if a new development or, just a classic value add multifamily came up, it kind of was low on the priority list as far as what we would review. And so that shifts, that changes, just over time, like with anything, you have your favorite food, but you don't want to eat it every day, all day. And so you might want to switch it up. And so this year it's been a lot of debt positions that we've been evaluating and looking at.
I'm a little bit of a fish out of water in this space. And also for our audience, can you break down, what a typical deal in the debt space looks like? And also too, when people think of debt, they may be thinking of like personal debt. How does this look in the commercial space?
Yeah. So when we're speaking about debt in the commercial space, meaning we are the lender and we are lending to borrowers. And so that can look a couple of different ways. On the kind of personal side, that can be for fix and flippers that are looking to borrow for their project.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
So you can actually loan to those individuals that are looking for money to renovate a house or whatever it is that they're working on. Or there's also real estate debt funds where this is you're working with an operator, a GP, and they're collecting capital and they're out there vetting, let's say, multifamily or maybe a lot of different individual single family fix and flippers. And so they are just pooling funds from limited partners and then they are doing the underwriting and vetting and lending out money to different either individuals or companies that are institutional operators that are buying multifamily, and so you are a part of the debt fund. Or there's also where you can be in a preferred equity position on the debt. So if anyone has been following the multifamily space for the past couple of years, the debt has been a huge issue for a lot of multifamily operators that maybe have bought in 2020 through 2022 with these adjustable rate mortgages. And then, they were 2 or 3 year terms, interest only. Then the rate is coming due. The rates are jumping up as rates have skyrocketed and they can't service the debt, meaning they're not collecting enough income to be able to pay off their debt, pay for rate caps and all the other expenses, insurance costs, everything that's going up. And so they just have a lot more expenses than income. And so the asset may be doing well and high occupancy and great tenants, but if the finances are distressed, and so can
Sure.
go out and they can either do a capital call, with their common equity stakeholders, or they can borrow. And basically, when you borrow, you're putting that second, because they still have that senior debt, you're putting that second loan right behind that senior debt and kind of pushes down all the other common equity stakeholders in the capital stack. So you or we can be a part of that preferred equity where we come in as kind of that. I mean, I say quote unquote rescue capital. So as opposed to them having to do a capital call or doing whatever, they need money. Bottom line is they need money to keep operating. They can go out and take a second loan or structure it like a preferred equity where they're providing ownership, but that preferred equity is being paid right behind the senior debt. And so, there's opportunities where you can be that money that goes to them to keep their property afloat. So different kind of ways you can be involved as a lender when you're doing debt investments.
As someone in the space, you've seen people, make mistakes, maybe buying too deep in the, last 5 years, and that's why they're being put in these tough spots. Uh, is there one asset class or is there one common error that you've seen with other um, investment groups or syndications where maybe they bought too deep in, office or apartment complexes? Is there a common theme that you're seeing?
I Just like what I mentioned on with multifamily, there's the common theme where a lot they were buying with adjustable rate mortgages. And so, when the rates spiked as fast as they did, over the past couple of years, it kind of blew through their debt service numbers. And then when it comes to like different asset classes, like, office and retail or industrial, no one knows what tomorrow will hold, but I do think multifamily and or even more than multifamily office space has probably been struggling the most out of all of the different kind of common asset classes when we're looking at different real estate vehicles. I think multi office space just due with what COVID happened and how we work and people being remote.
Yeah.
You and I are remote, doing this now, and so I think those that were in office space are struggling probably the most. Second, I'd probably say is multifamily. Retail has surprisingly maintained or kind of held steady. Where I thought retail would probably falter with, people, not needing as much, just retail space with, e-commerce and things like that. But that
Yeah.
has surprisingly it's had some bumps, but it surprisingly held pretty steady and pretty strong. Um,
Hmm.
If you're looking for consistent, high quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Industrial, I think has fared extremely well. So it just depends on where I think the operator's expertise was. If they have always done office building and if they had no expertise in anything else, I think they're probably struggling the most. And I have seen a few that have tried to that were made predominantly historically office building operators and developers and whatnot, and they've shifted into other asset classes, which I guess is good to be able to pivot and
Yeah.
diversify. But I do think they're probably going to have some learning curves and bumps along the way because retail is very different than multifamily or office or whatever. They have their own nuances. Yes, it's still real estate in the six. It's a building or whatnot, but there are a different type of clients, different type of tenants, different type of service providers, vendors that support it, different type of debt that you might take out on it. I'm very much so a pro of someone that can pivot into and adjust with the market. But I do think they will have learning curves that an LP
We'll go
as
along
I
with
am needs
it.
to look out for as you're entrusting them to be good stewards of your capital.
You've got a background in the insurance space, so you're no foreigner to pivoting, right? When we talk about insurance to real estate, there's some similarities there between the two. But I want to ask you, as someone who's managed multiple different businesses, what's your approach to pivoting, right? So we're looking at right now, you don't want to buy the wrong deal in commercial. At the same point in time, you don't want to say, hey, commercial is going to be bad indefinitely, because at some point in time the market's going to turn around. How do you know, hey, I've got to make a pivot here, or hey, this is where I might want to try something different? What's your personal approach to pivoting?
Yeah, and that's a tough one because, like I said, no one knows what tomorrow will hold, and so you're kind of making future predictions based on historical data a lot of times, and that's really in insurance. That's what actuaries do, and kind of how we set and how they set pricing and things like that. You kind of just look at historical data and what has happened historically to make predictions on what you should do today for a positive return tomorrow. So the same thing with the stock market. If you look back, you say, oh, historically, it's returned anywhere from 7 to 10%, depending on the return period that you're looking at 20 years, 50 years, 100 years, whatever. You might fall in if you look at it just for the past year, okay, it's great, 17% returns. But if you look further back, your perspective will be different. So I think a lot of it is really just looking the best that I believe that you can do is just look into what has happened historically and what has trended when things happen. When this happened, then that, when this happened, then this, and try to just evaluate it with, looking at historical trends to make, predictions on what will likely happen again. And so I don't think there's an exact finite answer, a silver bullet, but that's what I tend to do is just kind of look historically what has happened and then try to make the best educated prediction of what will happen tomorrow and try to put myself in that position to be able to capitalize in the best way possible.
I want to pivot a bit here and ask you maybe a different question. When we talk about different asset classes and strategies that investors are applying. I come from the fix and flip space and wholesale distressed real estate, turning those, 90-day flips, that type of thing. But that's becoming harder and harder. And I'm seeing more people from all different backgrounds, all different, specialties go into development. And now because of that, you're having, maybe a lot of newer developers, but you're also having interests from like private equity and from people who may be investing, across state lines. And you're also competing with, the DR Hortons and the Lennars of the world in development. I'm curious to get your thoughts. Out there in Houston, I know there's tons of development. in what you're seeing in new development, whether it comes to, multi-use commercial, retail, with apartments, or whether it comes to just new subdivisions entirely that are popping up all over the place.
Yeah, I think in a place like Houston, we're so spread out landmass wise.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
To where you can be in Pearland to the Woodlands to Katy to Cypress to Humble to actually Houston or city proper. So I mean the MSA is so large, unlike say like a New York or Chicago, where a lot of times you're going vertical, and so if they have these office buildings, you'll see a lot of the headlines are they're converting them into multifamily, into retail on the bottom and maybe livable space on the top. Whereas in Houston, yeah, they can kind of just expand out and buy a plot of land or some open land that's there, or and convert it and just build ground up, not converting anything from something to something, but just take raw land and builds it up. So in my market here in Houston, I do see a lot more of just land that then you just start seeing the pipes laid down and the signs go up
Yeah.
and the yellow, all the earth moving equipment starts to show up, and then a year or two later it's an apartment complex or it's a new office space or retail building or whatever it may be. So I think depending on the market that you're in, and but for Texas, we're the great state of Texas, all this land everywhere. Yeah, I think it's more than converting old buildings. I'm just seeing a lot of and I say a lot, I use that term loosely. I have seen projects going up. I forget what the data trends are as far as permits pulled and whatnot, but I've definitely just around as you drive around. Yes, I'm seeing some new development. A lot of I'm looking at multifamily, but I do see a lot of new development multifamily going up.
I was in Houston in either late July or early August of this year, a couple months back, and I was blown away by how much uh, development, how many new areas, how it was so full of life. Like I was in the third ward, staying with a buddy, and then we went to, I forget the name of the stadium, but it's not Minute Maid any longer, right? But we were out
Bacon or
there.
Dyken, yeah.
Yeah, and I was like, "I can't believe they changed the name. What happened?" But, uh, uh, when I was out there, I was marveling at how much my perception was really like off. I was thinking like it was going to be maybe some distressed areas, but it was all brand new. Like there was coffee shops in every corner, yoga studio. You had like retail, and then any areas where you might think that hey, this might be a potentially distressed area. You go like 2 blocks down the road, and they're flipping houses over there. And I'm sure it's just going to continue on like that. Also, Houston does have somewhat of a downward pressure when it comes to pricing for Texas in general. Whether that's because of the insurance costs, I don't know exactly. I'm imagining that has something to do with it. But there's so much interest in Houston, not just from Texans, but from people all across the country looking at these prices and going, hey, is that real?
Yeah. Yeah. Yeah, that historically that has been the South in general. I mean, for sure, and that's why a lot of not just even Houston, but in Texas. I mean, where Facebook and Tesla and Google, they were moving to the Austin area. Just because I think a lot of it is the legislation and some of the laws and things like that for businesses in the state of Texas and how they're taxed and different tax credits and breaks that they get. I know just here in Houston, which is in the Woodlands, ExxonMobil moved their headquarters. This was a while ago, but they built a massive headquarters in the Woodlands, Texas. And I've heard they had some massive tax break by moving it here, into this area, into the state of Texas. And so yes, there. And another thing within Houston, I don't know if this is a Texas thing, but I do know within Houston, there's not a lot of like zoning like where you can't, you can basically have a house right next to a restaurant. They don't have, zoning type, a lot of rules around that. So you can kind of build anything everywhere. So to your point, when you say, it was like, oh, there's a yoga studio, then they were flipping a house. And then so basically like there's retail, coffee shops, and then there's just a house
Yeah.
right next to it. And that's kind of, yeah, how it is to where you blink and you're in a neighborhood, then you're at the mall.
Have you seen this? Was the craziest thing. I don't know what was going on, but right next to that stadium, right, there was a house. It looked like a huge, huge Victorian house that was like on stilts. And I was like, that
Yeah.
costs a lot of money to do that. And it's so distressed. Like, what is going on there?
Seeing that, I believe that is a historic house that I don't know if there's nonprofit organizations that may be trying to preserve it or keep it there. There may be some. Don't quote me on any of this. There may be some battle with the city and on the land and whatnot. But I know exactly that house that you're speaking of. That it's a massive house. It's like on
Yeah.
cinder blocks. That's like right across the street from like the
The
baseball
stadium.
stadium.
Yeah. I was like,
Think
what?
it falls within some historic district that either the city or nonprofits are trying to preserve and save the historical ness of it. I don't know all the details, but yes, I believe it's something with it being a historic either land or property or something that but when big money comes in, tries to regentrify and kick everyone and everything out. And I think that may be one of the pieces that people have been trying to preserve within that area.
When you mentioned having different zoning, that was one of the things that came up. I said when I went to Houston, that blew my mind, and then just how amazing the third ward was in Houston in general. Tara, we are coming up on time here though. Where can folks go to reach out to you, or how can they learn more about PowerPool Fund?
Yeah, they can learn more about PowerPool Fund at the website on powerpoolfund.com. And they can also schedule a call with me on the website and shoot me an email, just info@powerpoolfund.com. They can also follow and connect on all socials. So Facebook, Instagram, YouTube, I even started a TikTok little page there. Look at me getting in. I'm late to the party, but even started up a little TikTok page for Powerful Fun. But it's all just about learning, educating yourself, so you just feel more confident as you're going out there investing. No one knows all the answers to everything. The Oracle of Omaha himself, I'm sure, will admit he's made mistakes in his investing world. But the key is to just keep educating yourself, keeping an ear to the street on whatever it is that you're trying to invest in, and try to make the best decisions possible with eyes wide open as you're going into these different vehicles to deploy your capital and grow it.
Tara, thank you so much for coming on the show here today.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.